Hey everybody, hope we're all doing well. Welcome back to another Sunday session video. This time round it's just going to be myself. Luke is actually not going to be in this week's Sunday session. It was his birthday on Thursday and he's away for 4 days, so he's not back until Monday evening, Tuesday, so he's not going to be able to partake in this Sunday session. So I'm going to try go a bit more in depth and drag my section out a bit more to give you the same amount of content you would have gotten if it was the both of us, except obviously it'll just be my perspective. So I think I will sort of do what I usually do and just give very quick updates and what I think price is going to do in the coming week. And then I'm also going to find a market to do a full top down on, so as well as getting some predictions, you can also see how I go about analysing the market. So without further ado, let's jump straight in. A disclaimer though before we start anything, all of the analysis that we do here, we update a lot of it in our Learning Lounge, which is a free Telegram group chat. If you're interested in the financial markets, trading, definitely a place to be, completely free. We're approaching about 400 members in there now, and it's pretty much just daily content. We go over fundamental news, market analysis, just a range of different issues. So make sure to get yourself in there just so you can stay up to date with what happens with these markets after our analysis. So regardless, I'm here on the euro to the US dollar currency pair. This market has been extremely heavily bearish for some time now. We were stuck in a range for a while, which I know myself and quite a few other people were expecting price to come out bullish from this range, just to mitigate some of the positions higher, and because it was giving us some bullish price action. But then something happened that pretty much just made a lot of markets depreciate around midweek. After that, we've come out of said range, started trading down. We have set a high in the market, a low, and then we've come up to mitigate a position within the high that was left over. And then from here, we've come to create a lower low. So taking this as an impulsive wave, I then knew that I wanted price to come up and mitigate one of these positions higher. So firstly, invalidated a zone down here where I was looking to continue fractal structure, which would be impulse, retrace into here, another impulse down. But after seeing price blow through that and us not really having any other unmitigated positions in this region, I thought, okay, we're probably going to break structure to give a retracement or a correctional wave in the higher time frame scheme of things. So that's exactly what happened. We saw price trade up, tap into this higher zone. These are the two areas that I thought were pretty much the only regions in the market that act as an unmitigated area. We've obviously blown through the first one, which we're watching, and because price approached with such high volume, I knew that price probably wasn't going to react to this. But again, price has come up, tapped in and made a move lower. The thing that I don't really like about this is the fact that we've left a lot of liquidity in this region. That's not nice because it gives us an upside target. Obviously price is always wanting to clear liquidity when it can, so leaving that much liquidity there is slightly concerning. But since then we have seen price displace, trade down. So by the looks of things, we've had an impulsive wave down, a correction, and the start of a new impulsive wave. So moving forward, depending on how price reacts, just because it's built liquidity here doesn't 100% mean it's going to blow through. But I'm just going to be cautious. However, I will still be looking to try and capitalize on this potential bearishness that will emerge to come and put a new lower low in place. So we could either look to get involved in the scheme of fractal structure, but as of right now, it is 8:30 p.m. on Friday, so we've still got like an hour and a half of the market being live. As of next week, I'll probably wait for this low to get broken, take the impulsive wave, try and find a point of interest within that impulsive wave. For an example, we see price trade us down, we have that breaker structure. I highlight this in my blue box as an impulsive wave. I highlight points of interest wherever they may be, and then we see price trade us back up, tap in and continue lower, and then obviously we'd expect the continuation all the way down to the lower low, so we'd look to ride a sell position all that way. So another market I've been doing quite a lot of analysis on recently and been watching is the Australian dollar to the US dollar, heavily bearish. So we've had a correctional wave, trade us back up, this being the low created from the previous impulsive wave. We tap into a point of interest, we distribute, we start making runs lower. So we've had our first impulsive wave down, a correctional wave which comes to mitigate the highest unmitigated position. We find a distribution within this, After the distribution, again, we start to break down. We break the previous low in the market that was set here. And it seems now that price is looking to reverse higher. And we're looking at two things at the moment. We'll see as we go down to the 1 hour how price could actually give us a continuation where we can then start to look to get in on more shorts. Or if price surpasses the 1 hour protected high, these are the two zones that seem unmitigated to me that price could potentially trade as bullish into for then getting a wider scheme reversal. Now these alerts are all over the spot because I have not updated them in a long time, so let's just put them where they need to be. So now also go down to the 1 hour and just look inside of here. We can see that this is a clear impulsive wave. We had a fractal displacement, so I knew that this impulsive wave had ended. We're getting ready to put in a correctional wave, and then in my eyes these two zones represent regions where price could actually react to. If we go to the 15-minute, we can see that two last buy to sell candles. I'm expecting price to potentially come tap into these. If it introduces enough selling pressure, we can then look to ride price down past this 1 hour final target and continue the higher time frame impulsive wave lower. Now obviously we are day traders, so we were looking as well for intermediary buy positions we could get after the fractal displacement, because I understand that price, when it does go bullish after this displacement, is going to be bullish until at least the lower POI. So I noticed that at this point we had a few unmitigated positions. Price taps us in and then we take off. And then on the last live stream, which we did on Friday, which I did earlier, I was actually running through how we could have found an entry, how we could have refined that entry, and we could have been looking at a 16-to-1 trade here. I do all the analysis for that live on stream, so if you want to actually check that out, just go back and check the last stream we did, and that will actually showcase everything. Okay, so as promised, I said I would do a full top down on a market. That is exactly what I'm going to do now. I've got the euro, the Australian dollar market in front of me. And I'm just going to talk through what I'm seeing. So in the market, when this low was created, we know it should have been a protected low, because after we broke structure, we then create it as a protected low. I don't actually have that as a template, but we'll just say break of structure because it eventually does come and do that. So we've had that break of structure. We've had a new lower low put in place. After that happened, we would have assumed that price wanted to come and create a lower high. So we would have taken the last buy to sell candle, which represents this right here. We see that price taps us in. Since the tap, we've then reversed, and it seems like we're going to trade bearish all the way down to this final target, which would be the previous low in the market. So this is our current final target right here. So we're going to make the assumption that price will now continue trading bearish. And the thing that I quite like about this move is since the mitigation up here, we've continued. So I can't imagine price coming back up soon to mitigate any of this, obviously, because we have started to continue lower. So in the scheme of things, we've had this break of structure here, which to me indicates to us now that this is a protected high. However, although this is the swing high, yes, I believe this is the real start of the impulsive wave because everything here has been mitigated. So this is the highest point I believe price can come before it sort of invalidates the current bearishness. So I'm going to say this, in my eyes, is an invalidation zone. Just make this bigger text so it can actually be seen properly. 20, perfect. And then obviously from here, we can see that price has ended its impulsive wave lower. So what we can do is we can take this with a blue box, highlight our impulsive wave like so. Okay, so now we've got this as an impulsive wave. We need to decide where inside of this impulsive wave acts as unmitigated positions or points of interest. Obviously, we've done step one. We're in the process of our top down. We have identified the most recent impulsive wave. Now, where inside of this is price most likely to react? So obviously, we have our last buy to sell. The reason why this is quite a good zone for us to look at is actually because we have a lot of market inefficiency just in this region. I say a lot, but a little bit of market inefficiency here where we've had no price action return. But then in this region, we have very efficient structure because price is wicking up and down. It's mitigating everything in this region whilst also creating a lot of liquidity in this region for price to come and run. And then another region, obviously another brilliant buy to sell candle, which we have right here. We have already seen a bit of rejection. Obviously, in hindsight, we can see that now. So we could argue that price, yes, it has reversed this one. So let's go lower, see if there was any confirmation for an entry. We have a double top here, so not a clear distribution, but if we just follow structure, does price, okay, so we've actually created a little bit of liquidity here. So what I would need to see to initiate any shorts from this point is I'd have to see the low get broken. I'd have to see price penetrate this low right here before it gives me enough confirmation for me to start going short. Because we've left that liquidity, it could be likely that we are distributing, but what we're actually going to see is either a full distribution, maybe we give a sign of weakness there, we blow through that liquidity, we then trade down, continue that downtrend, or we've created that liquidity because we have the purpose of blowing through this and then potentially going to mitigate any zone higher, which in my eyes represents something in that region. So that is pretty much all we need to look out for on this market. Is will we see price displace this low? And if so, we can then start looking to go short. We would of course take this as the impulsive wave after it displaces, look inside of the impulsive wave for points of interest, and then look to go short all the way down to the final target here. Now, just a little insight into the US dollar to the Japanese yen. I have a slightly unconfirmed bias on this, just because this does actually act as the last unmitigated demand zone within this impulsive wave up. Obviously, this is a protected low, so until in the higher time frame scheme of things, we break the protected low, we are technically still bullish. So we haven't given ourselves a longer term retracement that's come to penetrate that, that's actually confirmed that we are going short. However, we did have this displacement, which did confirm shorter term bearishness. Now, I'm just going to be careful because we do have a slightly arbitrary situation here where, yes, price has mitigated this demand zone, but if we do a proper supply and demand analysis of this market, there's a lot of rejection to the upside. Price does seem hesitant to make any moves higher, and then we also have this unmitigated position left over. So I'm actually looking to see if price enters this region, potentially see some supply entry in the market, have some rejection. Worst case scenario, we potentially ride price down slightly, catch a partial, and then see it reverse higher. But we can still profit from something like that, obviously through good risk management. If not, this is a sort of trade I'd be looking at, catching something inside of here, so seeing price trade up, give us a distribution, and then come lower. And if it does do that, I'm then expecting the protected low to be broken. But as I stated, if we were to really zoom in this region, in my eyes, either this position here or this position here are the two regions at the bottom that are unmitigated, because we see everything else does seem to get mitigated as we go along. So I'm just going to be slightly cautious. Obviously, there were a couple zones it could have reacted to in here, so it could just be by chance that we've wicked into this in this impulsive wave down in the scheme of this fractal structure. So I'm just going to be looking at both sides of the market. Obviously, if price blows through this, I'll resume to go bullish. If not, I'll be potentially looking for any distributions in this region to then take price all the way down. But regardless, that is now going to conclude this video. Rather than just trying to really skim through markets as quick as possible, just so I can give you a nice outlook on a few pairs, I've been able to go a bit more in depth, give you a bit more explanation behind why I'm looking at these markets and what I think they're going to do longer term. I hope you have enjoyed this. Once again, apologies that Luke's section has not been within this video. Just make sure you're following us on all socials so you can have updates about stuff like this. We always give any major updates into either the Learning Lounge or on our socials. Make sure if you have enjoyed, like, comment, subscribe, all that good stuff. It just helps us with the algorithms. And if you found this useful, it helps us get out there, and potentially other people will also find it useful, and it will help them also advance their knowledge and career within trading. But with that being said, thank you for watching, and we'll see you next week in the next Sunday sessions, where I'll be back to both myself and Luke.